Hi, everybody. It's Tim Knight. It's a picture of Edward R. Murrow. The reason I have him up here is because there's a movie that came out, I guess, a year or so ago called Good Night and Good Luck about Edward Murrow and his confrontation with Senator McCarthy. And one of my favorite scenes in the movie is when Bill Paley, who is the head of CBS, and he's been having a lot of concerns about Murrow going head to head with McCarthy because it's a good journalistic decision, but a very bad business decision. And just before Murrow goes on the air with his story, Paley calls down to the studio and says, Ed, I'm with you today and I'm with you tomorrow. And that made an impression on me because loyalty is something that means a lot to me. People think I'm a bear. I'm actually a dog. I'm a loyal sort. I'll do anything for my friends. And unfortunately, the flip side is I never forget a slight because I'm a sensitive chap. So I tend to remember my enemies forever. Luckily, my friends are much more numerous than my enemies. And I just want to thank everybody for continuing to be a sloper through what have been some very, very, very dark days for the Bears, notably this cursed rise in September. I shall spit on the month of September until the day I die now. My hatred for this month runs very deep because of all the jabs we've had over the past year and a half or so. That's got to be the nastiest and certainly the most surprising. But it's over in October, and my beloved autumn is here. And perhaps things will turn more our way now. But I wanted to review some of the next charts. As I'm wont to do these days, I have a long SPY position, not because I like it, not because I want it, and certainly not because the market seems remarkably bullish, but as an insurance policy, sometimes an expensive one, since I have a lot of small short positions on. I am not using margin right now, but I've got a bunch of short positions, and we'll see what tomorrow holds. Today was a pretty good day. We see here the ES in front of us, and I made the mistake of tempting the market gods back on the 23rd of September because the price action fell beneath that neckline, which I felt and still think is important because it affirmed that this inverted head and shoulders, such as it is, wasn't going to zoom into the oft-cited 1250 that everyone seems convinced that it's bound to go to because there's an election coming, as if that's going to help. But anyway, I thought, well, the Bulls have got it now. Well, the Bulls didn't have it at all. The very next day, the market wrenched higher by 20 plus points. And has been noodling around ever since. So I think I'm going to keep my mouth shut from now on, lest the market gods hear me about any sort of bullish failures. The way I say things now is if we are going to head lower, and I still have my green bar of hope down there, if we are going to ultimately head down toward my target, a few things have to happen. First challenge is that line, the big bold blue line right there, has to be cut through in some meaningful way. That's at about 1121 on the cash index. That shouldn't be too hard. The next challenge, which is a much bigger one, would be to cut through that ascending trend line. That is a good 80 to 90 points away right now. So even if we did only go that far, that's not too shabby. And breaking that, just getting into science fiction here for the Bears, the big, stupid, blankety blank line that we'd really have to cut through, which has never seemed to have happened since about 1926, would be 1040. which I used to hate because that's a tax form, but I hate it for different reasons now. And the ultimate would be to cut through the lows from early July. And then it would be all systems go. So we only have to have 17 miracles for it to actually get that low. Now, I know that there are arguments for why things will stay up. Number one is because Washington's completely crooked, and Bernanke will do anything under the sun to make sure that the elections go Obama's way. Perfectly plausible reason. I think that if we do start to have a bit of a tumble, or more than a bit of a tumble, if we were like approaching this trend line, the odds of some cheat like QE2 coming out get much higher. The only exogenous event, barring terrorist attack, which people would probably blame me for if it happened, but barring terrorist attack, would be a slew of disappointing earnings, because things are priced for perfection right now. Look at Netflix, Priceline, Salesforce.com, Apple. Just look at chart after chart after chart. They're priced for perfection. And if perfection doesn't happen, God forbid if Apple came in with earnings that didn't excite, that's really the only thing I could see to really start smashing the market across the face with a sledgehammer. So besides that, these kind of upward lofty drifts that have been keeping things suspended would continue. So who knows what will happen to earnings? But I will say that a couple of weeks from now, as Intel and Google and the rest of them start to trickle in, that becomes a possibility. So if there is, and I read the latest STU tonight, and they're actually aiming for 875 or so, a good 50 points lower than my dream number of 925. If something were like that were to take place, it really would require just, oh my God, kind of, the earnings party is over kind of event. Thumbing through the charts here a bit. Let's see if we hit anything interesting. Another observation I'll make is that the gold breakout's getting a little long in the tooth here, because for the past few weeks it's just kind of diggling around that area without so much as a breakout. And what it requires, of course, is just a wholesale fall from here in the dollar. If things, what could very well happen is that gold and silver and gold miners and the euro and equities all fall, because they are all contingent on one thing and one thing alone, and that is the Forex market. And I don't have to tell you that the euro, having gone from 1.1874 to 1.3794, that's a hell of a rise. That is one hell of a rise. And for it to continue on, there would have to be something like Bernanke announcing $5 trillion of new cash being distributed, something god-awful, QE7 coming out to really put the final stake through the dollar's heart. Setting aside that, it seems to me it's more likely to get some softening in the euro. I'm sorry to bang the microphone like that, pardon. Somebody probably lost their hearing just now. Flipping this upside down like so, you can see just how, imagining this is a dollar graph, just how battered the dollar has become. But if the euro falls, then there's a lot of things that are going to fall with it. Just a side note here to profit chart users, don't be too puzzled that the Russell didn't move at all today. The Russell very much did move. Another quirk of our data feed problems right now is that the Russell went bye-bye. So no update there. If you're desperate for that kind of chart, dollar SML is a very good proxy for that kind of thing. And the last thing I'll say, and this didn't occur to me until I started recording, is that the tinfoil hats can come off now. We've had our requisite little drop in the market, and so we can go back to our regular avatars, and yay. If you see an ad or two that you like, please do click on it. I always appreciate that. And sorry to sound grumpy still. Today wasn't a bad day, but September's left me pissed off for a while. So that'll probably remain for a month. Anyway, that's it from me. Good night and good luck.